Hi guys, welcome to another session of Learning with Quant Analysis Analysis Diary. My name is Arijit and today we'll talk about technical analysis for absolute beginners and for those who are trying to get their hands on technical analysis. This is going to provide a head start. So, what exactly is technical analysis? So, is it even useful? Does it even work? With different type of stock market participants I came across, so found some people are absolutely hating it, as saying that technical analysis is a fluke or joke, and there are people who are absolutely worshipping the technical analysis. It's like some kind of game changer. For me, technical analysis is just another tool. So how you make use of that tool, it actually end of the day will depend on you. And this is most certainly not a fluke, because technical analysis is based on totally data driven, and I believe on whatever the data provides me. So it's definitely something to explore, something good you should be exploring since it's data driven. Today specifically we'll focus on learning some of the very basic things. So we'll assume that the viewers of this video has no prior knowledge of technical analysis in stock market. However, we will assume that you know basics about stock market itself, like how securities are traded, how they are bought and sold in the market. But you don't need to have any knowledge on technical analysis. Today's content also will focus on some of the specific topic, majorly because of the next sessions that we are going to hold. Before attending that sessions, you will be knowing these basics. Okay, so I'll get right to it. So what is technical analysis in stock market scenario? As I mentioned earlier, like it is a data driven analysis, so it's something, it's definitely not a fluke, because there is solid data that is behind the analysis. So it's a type of analysis, a form of analysis that relies on past and historical data of some company stocks prices or some scripts prices. Okay, so how the price action, take a note about this particular phrase, price actions, how the price and the volume traded in that particular stock or that particular script. So those kind of data, the price of the data, the volumes of the data, and then some other form of data which is derived from this basic price and volumes. So these data are plotted in a charts which enable us to do chart analysis, and this entire based on the price and volume and the other data that are related to these, this entire data analysis including the chart analysis, the whole thing is called technical analysis. So right now there is plenty of online tool and offline tool that where you can plot the chart directly. You don't even need to take a look at raw data. It was not so easy in the past, like when people did not have access to this kind of technologies, they used to do data analysis based on looking into the raw data. But even right now, for some people, the raw data itself can be very much useful, especially for people who are kind of like, don't like to stay in front of screen and want to be like, a little bit lazy. Also they want to still do the continue their investment or trading based on charts and analysis. So for them the raw data is still useful, because they can just use the direct raw data and then backtest their strategies in a software, or they can write program which will do that backtesting for them, and then based on that they can do live automated trade based on that data. So for them, they don't even need to see the chart. But these sessions will be focusing mostly on analysis using charts. So we'll not be looking at the raw data in this session. Okay, so without any further ado, let's jump directly into a charting tool. Okay, so there are many free tools available in the market. Some automatically comes if you have a broker account like Zerodha, Upstock or Fires or any of ICICI Direct. So they provide some sort of charting tool already. Then some independent provider are also there, like TradingView or is there. So this name TradingView might sound familiar to you because I already discussed about this tool while I talking in the another session related to screeners. Yes, so TradingView is like kind of jack of all trades and they have lot of features, and I myself haven't explored all of their features. So they also have a screener software in their, let's just go to Google and type TradingView. So this website will come up. Okay. So if you go to this TradingView, there are many options are there. Even you can go, there is option for screener which I discussed in the last sessions, but today we are going to directly into chart. Let's go into some random charts. Let's go into S&P 500. So if you click on that, there is something called full featured chart. If you click here, it will navigate to your a chart which is full featured. So it will look something like this. Let me clean up a little bit. Okay. So this is a chart. This is a chart, and this is how a chart look like. Okay. Now how to read this chart? So if you have a elementary maths idea, some basics geometry idea, you know that there is a x-axis which goes the horizontal axis, and then the y-axis, the vertical axis of a chart. Okay, so this is your origin, and left to right the timeline is from the past to present. To this comes as a present time. So this present the timeline, and this present the price axis. The horizontal axis present the time, and the vertical axis present the price axis. So it's price versus time plotted. Now the chart, you can see there are some green and red small bars you can see in this. So chart type can be changed from here using this button. So I can have a area chart, which you are already familiar if you have used some charting before in non-stock market related things. You can also have regular bar chart which looks something like this. So you can have normal line chart. So this is the most probably you have seen even in sports matches. They provide some statistics. So this kind of chart you have already seen, right? So in this case you will need to remember this will always denote the price axis, y axis, and this is denoting your time axis. So it's from left to right, past to present, and from bottom to top, low price to high price, with this denoting the current price. Okay, so with the chart, even though there are many types of chart, we'll specifically talk about candles type of chart. So candles denotes the small things, small bar thingy, they are called candles. Candles are denoted by 4 parameters. So there is one more thing in this chart. If you see, this is I was choosing this button as choosing the type of chart, and left to that there is a different time of time as there. So if I choose day or hour, then this particular individual component will be based on that time frame. So this is called the time frame of the chart. So if I right now has a day, that means this time frame is daily time frame. If I change it to hour, then this candles become hourly candle. Let's go back to the daily candle and see what are the components are there. So if you notice very well, the candle has majorly 2 colors, red and green, and then they have a body part, so which is this to this. If you So this is the body of this candle, okay, this green candle, and this is the wick of the candle, the small line that coming out from the body of the candle, that's called wick. So some candle may not have wick, but there some candle may have this wick. So the wick can be in both side, upper or lower wick. Okay, and candles are calculated based on the raw data, right? So I told that it's actually represented by the raw data itself, but it is represented in chart. So raw data, so this is a daily chart. So this is vertical thing, it's pointing to 15th of June of 2020. So this is a candle of 15th of June day, and when the candle is green, it means opening was the low of the opening was the lower part of the body, that is here right now where I pointed. So if I make a horizontal line here, so this is the opening of this green candle. Because the body is green, if body is red, then opening is the higher side of the candle. So this is the opening of this red candle. So this is the opening of red candle, and for opening is lower side for green, opening is higher side for red candle, and closing price will be the end of the body in the opposite side. So for this 15th June candle, the closing is this here, the end of the body. For 11th June candle, which is the red candle where opening was higher, the closing is here. Okay, so in this case there is a small wick in this green candle also. So what does wicks denote? So this is, I told, open, and this is close. The lower parts, the most lower part of the candle, including the wick, is denoting the day low. So that is the lowest price that day that stock or that script traded. And similarly, in the higher point of the candle, irrespective of its body or wick, that will be the highest trading price on that day. So a candle can denote opening, high, low, and closing. This 4 parameter one single candle can denote. So it's called OHLC. You must have heard about this word if you are reading some random topics on stock market. So that's about the candle. So that's how the candles are formed. If I change into this to hourly format, this will basically become the same thing: open, close, or green. For green, open will be low, and higher body of the side will be close, and then lower part of the wick or the body will be low, and higher part of the body or wick, whichever is the higher, will be the high. Open, high, low, close. So that's how candles are formed. So in different intervals. So it will be hourly candle or daily candle, weekly, monthly, like that. So I'll go back to the hourly daily candle of S&P 500, that script I chose. So you can change the script from here and type something like, let's say, Sensex. So S&P BSE Sensex. So that's our Indian index. Okay, so now we talked about candles. So there's another part is important of chart analysis, which is indicator. So if you go in this sections, there is something called indicator and strategy, this FX icon. If you click on here, it will give you a list of indicators. If you go built-in, so that will give some default built-in already developed indicators. So here we are going to talk about, include only one indicator called volume. Okay, so if I am adding the volume, it's not coming the volume because this is an index, not a stock, so they don't. Okay, yeah, right. So I added the volume here. So this sections, the lower part of the chart is denoting the volume. So this is a green candle, means the candle opening is lower, So it's a daily time frame. That day open was lower and close was higher. So exactly opposite for red candles. So if the candle is red here, that is mean this candle denotes that that day opening was higher and closing was lower. Okay, so that's what green, and the size of the candle depend on how much volume of that stocks traded that day. So obviously if the volume is higher, so candle size, this volume bars will be bigger. So you can see this big green, this big green, this big. So these days the volumes are traded higher. So there's a volume strength in that day. If the volumes the bar of the volume is less, that means the number of volume traded in that particular day, since it's a daily time frame chart, has been very less. So depending on the scenario, the volume could be very useful tool indicator. Okay, so this is denotes the price, where price is moving low or high based on the candle. So you can check simple line chart also. So price is coming down, going up, coming down, something like this. Or you can have a candle which gives me more precise data of the particular day where it's opened or closed. Okay, so green and red candle. So there are much more things to learn about candlesticks and volume, and there are other multiple different types of indicators. So we don't have enough time to discuss all of these, as we are going to cover some other basic topics. So we spoke about it being price, volume, charts, candlesticks and indicators. So yeah, so this is how you read the charts. You use the read the candlestick in that way, and volume could be another useful thing. We'll come to it again and how it could be more useful later. And well, there are many other indicators that you could add to your chart or explore. So make sure if you're exploring an indicator, learn details about it, because some indicator may give false signal, some indicator sometimes gives right signal. So you must know the weakness of indicator while you're studying for indicators, but that may be a lesson for another session. Now we'll going to something called demand and supply. Okay, so some of the beginners might be thinking, finally something familiar, demand and supply. Well, you guessed it right. The concept is quite similar as you know it outside stock market context. So it's basically could be in any transaction that happens in outside any world scope, in any fields. It could be a simple retail business where there is a supply of products and then there is a demand from the consumer who buy the product in a retail business. Or it could be a getting new job with a new skill set. So there is a job with required skill set. So there's a supply of job, and then there's a demand of a job based on the skill set, and then supply of the people who will be doing the job with the required skill set. So the entire supply demand concept comes almost similarly in stock market technical analysis, except there are slight differences. Well, it's a slight. So let's get back to our chart again. Okay, so we were searching our chart of HDFC Bank. So it's a very familiar bank, and I added this bank for checking the volume earlier. Now, so how is supply and demand concept in technical analysis is a little different. So we normally what we are seeing in the chart is from previous time to current time, right? So the price we are seeing right now. Okay, so we see that price was coming here, it was trading at low, then price went higher, then price came fallen down again lower. So how to read this? Low initially was 10. So if you put the mouse here, so the price in the right side of the screen, this section of the screen is showing what's the current price, and if you put anything vertical, let's say I use the vertical line. So this is the 16th September price is here. Okay, so price is going up and down. So almost like it's never stay at one place, or even it's moving up and down, it's not always going like directly down. Sometimes it went down, then it went up, it went down, again it went up. So it's the whole thing is part of the price. So it's always either price going up or down, right? Now talking about demand supply. So if you see at one point that, let's say change the time frame a little bigger, or let's go to a lower previous stock movement. So if you see here, the price has been going up from here, but after going up till here, price came down. So price stocks went up when there is a good demand are there. So basically a lot of people trying to buy this stock. So the good demand is there, so price goes up till point where the sum of the more people try to sell it. So more supply of that script volume. So there is more supplier present here who are selling here at this price, and then this place where the price started going up from here to here, then there was a demand. So in roughly we can say this is around 920. This is where the demand kicked off, and then price started going up because people was very interested in buying. And then here a supply came off because many people started selling here, so price again started to come down. So that's the price is here, where in terms of technical analysis, so demand supply basically means zones where every time price comes, and then some people just buy it, get interested to buy, and they think that buying here is profitable, they will be profitable. And for supply it will be exactly opposite. So for supply it will be a zone where people think that this is the time, I don't think price will go off from here anymore, so I think I should sell. So there is more seller or supplier comes up. So here more buyer or more demanding people comes up, and there more sellers and suppliers comes up. If you notice any chart, not just HDFC Bank, let's say we know a company's name like Tata. Everyone has heard about Tata Steel, right? If you see here, this is a daily chart, right? I will draw something a rectangular, okay, around here to here. Okay, so this price I will denote with two line which will show me also the price. So 400 to 440, this price inside this yellow thingy. I'll extend it further. So this could be one sample demand zone, and then I'll draw one around here. Then I can also draw another one. Okay, so primarily if you draw this rectangle in a chart, you will be seeing that in certain rectangular price comes down from the top, like here it came down, then price started going up again. So demand kicked in this area of the chart. So if you see, price came down here and then price started going up here again, okay, until it came around initially here where price again fallen down a little, then it started going up again. Once it crossed this zone above, price again came down, but it did not go down below this zone. So more demand kicked in around this. So this is where it become again a demand zone, and then price went up here. But at top of this here around 740 or 730, around this place, a lot of sellers came. So a lot of stock supplies came here. So sellers entered and supplies came in, and so price started coming down. If you notice again, even price when coming down, after coming to this zone, price again went up here. So this was the low made on 6th Feb. Then on 12th Feb you can see price went up again. So this provide the demand kicked in again. Then it happened again on 22nd Feb when price came down, then the demand kicked in and price went up again. So this is again where the demands kicked in. But after some time it crossed this zone and then it came down again. Okay. So there is one more term we can say that price get rejected or price get accepted. So when price was going up from here, from this initial demand zone, so it crossed this zone easily and then it crossed here. After coming here, price came down. So here price got rejected. So intermediate supply zone was here. So price got some rejected and then price came down here. Okay. Then price broken through this zone again above. The word breaking out I can use here. So price has broken out this zone and then went above. After that, every time it made come down, some demand came in here and people started buying again. So price kept going up. Again it came down, but again when this zone came, the demand kicked in. So price people bought it more and then it went up. So this is how it happened. Demand zone worked. But here you can see the supply zone kicked in where price got rejected again from the top and it was not able to cross this zone. So rejections came here. Here's a breakout can be called. The price was accepted by the buyers that price should move above this zone. In this supply zone, price got rejected. Again it came down. So you can say in supply zone, price get rejected from the top. So it not able to cross above. And when it comes to demand zone, what happens? So price got rejected from the bottom. So people buy here. So people buy in demand zone and sell in supply zone. So demand kicked in here and then price rejection happened. So price could not cross below the demand zone. Similarly, price rejection happened in a supply zone and price could not cross above this zone. So the one more thing here, so the main reason I mentioned the volume, while you are drawing this supply or demand zone, so one thing you will be noticing that overlap of this highs and lows. So if this lows are multiple lows coming in one zone, so that could be that way you can draw a demand zone. And also a demand zone could be converted to a supply zone once price is below it. So you can see price came down here. So price was accepted to go down here after it broke down here. Then after that, every time it came to this zone, the previous demand zone, it became a supply zone. So price got again rejected and it could not go above this. So price got rejected from the top. So this is again your acting as a supply zone. So the same demand zone now acting as a supply zone. Same happened here again. Price came up to test this zone. Price came to this price, but it could not go above. So this is turned out to be a supply zone in this portion of the section. So it could be something like a zone could be swappable. So when price is going up and then getting rejected at the bottom, that could act as a demand zone, and price going down and price then it could not go up above that zone, that could act as a supply zone. So a zone intermediate of that highest high and the lowest low of the price, there could be multiple intermediate demand supply zone which can act based on the time. It could either act as a demand zone here or a supply zone. So you could draw the demand zone connecting this low and highs overlapping in one zone, which acts as a rejection for the previous price. So if previous price was low, then rejection from the top. If previous price was above this zone, then rejection from the bottom. But if you see that and the very top or the very bottom, that demand and supply zone are absolute. Like there is no going beyond that until a breakout happens. Okay, so for practical use, you will be mostly working on the demand supply which are in between, and for also practical use, you will be considering those demand and supply, those top and those lows you will be using which has higher volume. So if I see the volume is higher in around here and then here, if this lows is very zone of importance. So you can see the volume is very high in this particular price zone. Now if I extend this further, you will be seeing it's overlapping with other highs and lows. So this is a good demand supply zone. Now current price is around here, right? So what will happen when price comes here? It's a possibility that once in the future when price comes here, it find this as a supply zone. So it's coming from the bottom, so it may find this zone to be a supply zone. So it might find a resistance. This word I am using, I'll be talking about it next. Okay, so the supply zone and demand zone can be used in this manner to predict what's the future price will behave, how this price will behave in the future when it come to this zone, that we can predict beforehand using demand and supply. So that's the usage of demand supply. So if you already bought somewhere around here or here or here at the bottom, or when price started going up around somewhere here, so you would probably be looking for booking your profit partially or selling the stock around somewhere around here. If you see this price is getting rejected from this zone, which means unless price get accepted and go across the zone, you will be selling your stock here. So that's give you a good point. Similarly, if it was for demand zone, let's say this was one of the demand zone, right? So price came down around sorry, not this one. So if you notice that price came down from top to here and then price found a support in here. Then from the bottom price got rejected here and then price started moving up and went very high from here until there is a supply zone is made final, and then it started falling down again slowly, crossing intermediate supply and demand zone, and it came down again here. This is the previous demand zone that was here. So price came here in the same demand zone and it found support and it went up here. So from bottom again rejection came and then price went up here. So that's how the demand and supply works. You will be, for drawing a demand supply zone, you will be emphasizing on lows, meeting the lows or highs, connecting, overlapping in a certain zone. Together with a good volume, it could be more important zone. If a zone has a great volume in it, some low or high, let's say I'm connecting this low and this low, and if I know that volume is greater in this zone, that means that's a more important demand zone. Or similarly for any zone that are getting high volume supply or sell off from there, so that is an important supply zone. And our next topic is support and resistance. So I mentioned that word support and resistance. So when price came down to the demand zone, it took support. The word support I used there. And when price came to supply zone, it found resistance, so it could not go above. So if when price going up and then it finding a rejection from the top, then you can say it found a resistance there. When price coming down and then it find a rejection from the bottom, so it found a support. So how is this difference from the demand and supply that we already discussed? So they might find very similar. So basically overall concept is same, right? It's one place people buy and then one place people sell. So what is the difference? The difference is supports are usually a single level. So we can say this is the zone is from here to here, or if I can extend a little bit here, so we can say this to this is a support zone, or we can say this is basically a demand zone or demand. But this 323, which is actual price, a single, it denotes a single price. This could be a support line. So this is support is a resistance, a single line. It's not a zone. Well, people use it's more casually. So people some people may call that the zone which is presented in the supply. If you can call just resistance zone casually, but essentially this is not a zone. This resistance is a level. So I'll remove the zone and I'll see this is the resistance. So as you can see, I have drawn a support and resistance here in this chart, but here is this one point where price went above the resistance, and here price took support here in this around same level only. But if you see a little bit of here, price came down below the here and actually takes support a little bit below it. So even though I have drawn this chart to be a support at this point, when my present is here, I am expecting when price is coming down, I am expecting price to take support around here. But as you see, price did not take support here. So essentially support and resistance are your speculative level based on your past data. So historical data wise, it's shown me that this could be a possible support. But when actually price came here, there was no rejections from it. Price could not go above. So here no green candle appeared, or instead price breached and closed below here strongly. So this is called a breakdown. Or here if price goes above this line, that's called a breakout above this resistance happened. So price could not stop moving in this line. So this was speculative level based on our past data, which I thought that this could be the resistance. But sometimes price does not respect support and resistance. So these are not absolute. These are something you're speculating. The price may take support here or price may take resistance there. So you will need to keep remembering that. Okay, so support resistance could be other types as well. Okay, so not just simple line that I have drawn here based on the high or low or based on demand zone. So mostly it will be easier if you draw demand zone and then draw the resistance or support. It will be easier for you. Or you can directly draw this lines using simple support and resistance. Okay, now let's go a little bit closer to current price. Okay, let's go back to our previous HDFC Bank chart. What I will do here, I'll draw a line here and I can say this is a support and price was coming around here, so this was a resistance. Okay, then price made a high here and here. So I have drawn some support and resistance. Okay, so at this point price went above the resistance and went to the next high. From here price did not find a rejections here. So at this point this resistance was not respected. So price gave a breakout above the resistance. and this is where the price were respected, and then the resistance were respected, and the rejection from the top came and price came down again back to support. From support again rejection came, price went up, but here price got accepted at the higher level, and then price had no rejections here, price won't move, but rejections came a little later around here. Okay, so this intermediate level did not work here. Again, after finding coming down below, it took a support around here. So this is roughly also most of the rejections came. So even the price came around here, we can draw another line instead. Okay, so there was one candle and then one rejection week of this candle, and there's another candle. Even the price came here, essentially most of the candles, if you see, they are below this 946 level, and then when it came up again and crossed, price got accepted it higher, it came down, it took support from a level which was previously acting as a strong resistance. So like demand and supply, it can also swap the position. So a resistance can become a support, or a support can become a resistance. So here price got accepted again and it went up till here, and price got rejected again. So from here it came down, and then it found a support around here. So which is also again, if you see, there is a small candle that tried coming down here, and it again immediately went back above this level. So there is two overlap of this two candle low. So while you are drawing the support and resistance, what are the things you will be considering apart from what you are already considering from supply demand? So you will be considering the lines that crosses multiple lows and highs. So it could be highs, it could be low. So the maximum number of overlapping candles, high or lows, will give you a better support line or better resistance line. Even there is a conjunction of multiple line, they are better support or resistance, like this one. Let's say instead of this is a good support, this actually a far better support, because it has 1, 2, 3, 4, this 4 lows, and it's also covering some of the highs as well. So the more overlapping happens in that low or high, that is a stronger support and resistance. So you can distinguish between different type of support and resistance from the horizontal level itself, but there are other type of support. So we have seen like it's a horizontal line where price took support, or horizontal line where price took resistance, but this could also be a dynamic. We'll learn something called a trend line later. So you draw the trend line, you connecting the lows, and price can take support in trend line. This is not a great example of trend line. Let's go to a lower time frame so that we can show it in a better way. Yeah. So trend line are drawn in similar manner, connecting higher or lower part of the chart. So in an uptrend, when price is going up, you draw a trend line, and the lower side of the, you connecting the lows, you draw the trend line when price is going up, and when price goes down, you draw a trend line at the higher side of the candle. Okay, so trend line can act as a dynamic support or dynamic resistance. So in here, if you notice, I will connect a trend, upper trend line for this up move as well, just for this demo purpose. But normally you will draw in uptrend, you will be drawing the lower trend line. So if you notice that price came down here and then it came down here, so that's how I able to draw 2 lows I connected with the trend line. Okay, approximately, and then any subsequent time price will come low, it will take support in the trend line. So essentially trend line acts as a moving support or moving resistance. In this move also, if you see, the movement was small and price was limited, and always price got rejected in this upper trend line. But normally we don't use the upper trend line in a uptrend other than drawing a particular pattern. So this is, I can say, a pattern is formed, like a parallel line or parallel channel has been formed. So this is where we can draw the upper trend line, but normally uptrend you will be drawing a lower trend line for your references. But we will cover the more about trend line in some later sessions. So that was uptrend. Now in downtrend, you will have a lower trend line which is connecting the highs. Now see, there's something interesting here. It's not visible. Let's go a little. Yeah. So if you see this, the price got rejected here, came down, then price got rejected, so I able to connect a trend line here, and then there was a big fall and it came down, went up again. But if you see just slightly before the trend line hits, so in this case it was not exactly in trend line but slightly below it, price got suddenly started falling from here. In here again it met the price in trend line and it came down again. But in this candle, if you see, the price went above the trend line at it ended it. So trend line can act as a dynamic support or dynamic resistance. Now let's look at this trend line. So price was taking this as a small up move from here to here, and then it came down, took support and went up, and it then here around traded for few days here, and then it came down below it. So once it came down below it, it tried going up again, but this trend line again act as a resistance. So the same trend line which was acting as support in here, it act as a resistance in here. Okay, so that's more or less cover support and resistance part. Now let's go to last one. So swing patterns are type of pattern. Like I mentioned, there was a pattern in that like a channel, right? So it's like a two parallel line connecting and price is moving between two line, or let's say upper trend line and lower trend line, a support line or resistance line is trading between. So it's trading in a pattern. So this portion of the chart we can call it as a pattern. Or look at this part. This is a that looks like a English alphabet W. So we can call it a W pattern. So there are many such thing in swing trading. Specifically, there are different part of pattern we can draw in the chart, or you can see in your naked eye. So there is a one pattern called you guys may have heard of, those who are already familiar with some of the technical analysis before. So in this chart I can see, let's draw something with arc. So this W which was happening here, this pattern is not perfect, but it's more look like a cup, right? And then this portion of the thingy, if you see, this is like a small handle. If I go in lower time frame, this might be much more a bit better. Let's say I'll just use this portion. So it looks like a perfect cup, and then price was coming down from here. So I connected a upper trend line with the rejections, and it looks like a handle breakout happened here. So this is one cup and handle type of breakout. So there are many such patterns available, and we'll probably cover in another session in swing patterns. And the trend line can have a multiple usage, just not support and resistance. Apart from this, we spoke about support resistance, right? So there are other dynamic type of support resistance which can be used so in different indicators. So there is one popular indicator called moving average. So moving averages also can act as a support or resistance. So those kind of dynamic support resistance you can explore further. And the patterns we spoke about, so this is there is not enough time to cover everything here, so we'll probably talk about those in another session. So same for trend lines and the other topics that I could not cover here. And finally, thank you for having patience and learning. So while the technical analysis is a very vast subject, even many individual things I discussed here may not be enough detailed. So I would suggest if you go ahead and do some reading on the topics I discussed here or the topics I did not discuss here, you will have far better grasp or better understanding on this technical analysis. So this is where you start understanding the price chart and then how to draw support, resistance, demand, supply, the things that we discussed in this session. Practice this on actual chart and then you will get slowly better, and then you can use in much more practical use. But on practical use we will be covering more on later sessions, on different sessions. Do like and subscribe, or feel free to comment your questions or if you liked it or not, but do feel free to comment, and stay subscribed for more content and upcoming days. Thanks and take care.